May profits be upon you. Welcome to another weekly Forex forecast. I I really appreciate you stopping by and checking out the video each and every week. I appreciate my subscribers and my viewers. And if you like the video, make sure you hit the like button before you leave, and do make sure you check out the comment section throughout the week because I like to leave updates in the comment section. So make sure you check in every now and again. All right. This is how I like to communicate with my viewers. All right. Now we're looking at the S&P right now, the S&P futures, right? Even if you're not in futures, you can follow it with CFDs. Okay. You can follow this and it'll apply to your CFDs as well, the FX, the different FX broker uh, uh, S&P uh, charts that they have. Okay, so what are we looking at? We're looking at the S&P, and I love the movement here. I love the bullish breakup structure here. I love the fact that there's nothing in this move, this bullish leg, that says we're getting weaker. Nothing. All right, so if until further notice, we got to stay bullish. I also want to share something with you. My mouth is not working right today. This is the COT report. All right, the commitment of traders. All right, and what is it saying? For non-commercial, which are the institutional investors and traders in the market. All right, the smart money, if you will, says that they are heavy on long and lighter on short positions. 374.8 as opposed to 261.4. They've added 7,900, call it 8,000 long positions to their dominant position. All right. And they've closed 42,000 shorts. So we see which way they're leaning. They want to see prices go higher. Easy. All right. Now, how will that affect us? Well, it better informs our decision making. Now, I want you to see the structure is saying it's bullish, right? You can see these two down candles, down closed candles, 2 weeks in a row. And then we have this bullish uh, close, a very strong momentum filled candle with a high close displacing above the swing high of down closed candles. Yikes! What is going on here? And that forms an order block or an area of fair value. Should price come back down here, I expect price to find support. Oh, come on, man! Why would you do that? Find support and continue higher. You understand? All right. What I want to see is the formation of fair value gaps. You see this line here? This is where we got one candle, two candles. We need three candles for a fair value gap to form. All right. If it comes back, if this candle, the new week opening candle here, if it comes all the way down here and leaves a wick, that would invalidate the formation of a new bullish fair value gap. You understand? We won't have that, which would mean prices pretty vulnerable for you know some bearish movement. All right, because we don't have the support in place anymore for price to come down to it and then continue higher from. All right, that's the way fair value gaps work. They show us what the order flow is. The order flow right now is bullish, and you can tell by the displacement here. All right, so we're waiting for this candle to form, and hopefully next week it'll form a bullish fair value gap where we can continue to go higher. Now, that being said, how do you figure, because this is an all-time high, how do you figure to find a target up there when there's no data? All right, there's no data up here. All right, so what do? Well, what I do is I use the Fibonacci retracement tool, the what do you call it? The trend based one, the, and with the Fibonacci extension on it. And what I do is this: I put it at the swing low, I tap it at the swing high, and then back to the swing low. Boom, 3 points of contact. 1, 2, 3. This is what we're measuring is the measured move. All right. What I want to see is this leg repeated from the low to the next high. So far, we're at 80% of that move. This is 100%. Just so that you can visualize what I'm talking about. I'm going to put a line here to here, right? Thicken it up so you can see it well. All right. And then I'm going to put that same line from this low. Sorry, I don't know how I did that. From that low to up here. All right. This is the same length. I want to see this measured move from going from that swing low to that swing high, from this swing low to this swing high. That's what I want to see. I want to see that repeated over here. That's what we're measuring. That's 100% move. A lot of times it'll turn around to 80%. Sometimes it'll go all the way to the 100. All right. We'll find out. But right now we're at the 80%. So price could fall from here and come back to this area of fair value, right in this little pocket. And we'll see what happens if that should happen. We'll see it in the price action, right? I hope you learned something anyway. Give me your comments on what I just showed you, and if you have a better way of looking at where price may go, where you can set up some reachable targets. Okay. Now, this is the daily. All right. I want you to see the daily clearly. What we have so far is there's that line of invalidation from the weekly, right? But on the daily, we have a bullish fair value gap here already formed, right? And let me get this. All right. And we also have one here. All right. These are good spots, good candidates for price to come back to test in order to go higher. All right. And we will hit that 80%. If I can get to it, we'll hit that 80% mark pretty soon. I think that that's definitely reachable this week. And maybe within we might get it by Monday. All right. And on our way to the higher target up here, the 100% move. All right. So I'm looking for price to either push back from the opening price or push back down from the opening price down to this bullish fair value gap. At this one, which is the where the swing high intersects with the fair value gap. That's the confluence of two different confluences, right? And when you can stack your confluences, it kind of gives you an assurance that price will probably do what you expect it to do. So I'm looking for price to hold here for sure. I think this is a high probability long position entry spot. All right, it could very well happen here. It could very well happen here. So I'm going to be looking at both. All right. I would love it to come down here to get a better price and we can get more profit. But that's something to look out for. Got it? All right. So we're going to move on to the NASDAQ, going back to the weekly time frame. You can see on the COT report, commitment of traders, you can see they have 62.7 thousand long positions, and they're adding 4,800, almost 5,000 to that number, and they're cutting loose their some 6,000, almost 7,000 short positions. All right, they are majority long positioned on the NASDAQ. They're looking for prices to go higher. All right, I've already did the measured move. I got 80% and 100% of the for my targets for the week for the immediate target and then the weekly target here. All right. And again, you can see price didn't charge through that swing high like it did on the S&P. It closed above it, yes, but it was a very timid close. We're going to see how price reacts, how price acts once it uh, gets past Monday. Tomorrow is a uh, uh, U.S. dollar U.S. bank holiday, so not the greatest trading um, conditions. All right, I'm going to sit it out myself, but uh, it's usually lower volume without the U.S. dollar, the U.S. banks involved in the markets. So it can lead to some wonky price movement. All right. So if price opens up and leaves a fair value gap, I'm going to leave this line of invalidation here. All right. If price doesn't come all the way back down here and invalidate the formation of a bullish fair value gap, I would love to see a little wick up here and then continue higher. That's what I'd like to see. If we get that, we can just go forward with a lot of confidence on our long positions. All right. Now on the daily, you see this daily fair value gap here, and we had one form with Friday's close here. All right. Price could very well do the same thing like I just showed you before. Come down and come on, man, and go higher from this, the first of fair value gap, or the second one. All right. I would love to see it down here because we have the confluences of the swing high intersecting the bullish fair value gap here, and makes it a little bit more sturdy. All right. And this is also the breakout area. So this will be a high probability trade. If this if price if this candle turns bearish and plows through this bullish fair value gap, I'm not going to panic. I'm going to think that I'm going to get a very nice price and a very nice setup when it gets down here. But I will keep my eye open for a bullish setup when it hits this fair value gap here. All right. Same deal on for the Dow Jones. If we go to the Dow Jones, we go back to the weekly, we can see 24,000 versus 11,000 for shorts. 24,000 long positions, and they're adding 1,000 long positions to that 24,000. All right, and they're closing 2,000 short positions. They're closing twice as many short positions as they are opening long positions. They're looking for price to go up. Look how strong price closed on last week, excuse me. All right, traded through and closed high. This is the way you want to see price displace through a swing high. And this formed an area of fair value, all right, or an order block. I'm looking for price to come back into this and then go up higher. Yes, there's an invalidation point on this one as well, down here for the 4 hour, all right. And price comes all the way down here, it's a pretty good chance it's probably going to go further. All right. It's going to keep continuing to the downside. Excuse me. So if we go to the weekly, to the daily, I'm sorry. If we go to the daily, you can see that we have a daily fair value gap here. All right. Price formed that one, formed this on Thursday. We had a good close on Friday above the high of the previous daily candle. That would indicate that price probably wants to take that high first. That's going to be that's going to be my first uh, uh, draw on liquidity. All right, that'll be my first target. Do we have a weekly target? Sure. Let's go back to the weekly and let's see if we can get one together. All right, if I can just get my internet is just not behaving like a good computer. All right. So, do we have enough data here to do what I need to do? Yes. Yes, we do. All right. So that's the way I would measure it, from this low to that swing high to the next swing low, and move it over here to the side. All right. What am I measuring for? I want to see the measure move. I want to see this. Oh, sorry. I want to see this move, that leg repeated from this swing low here all the way up. Bingo. Got it? This will be 100% of that move. We are closing in on the 80 spot, and I do believe there's a good chance we're going to hit that 80 spot this week. All right, so that's my projection. All right, that's my hope. Okay, I hope you enjoyed this video. If you did, make sure you hit the like button, hit the boost, leave a comment if you got any questions. If you have any questions regarding the measured move, and put in together some targets for yourself for the weekend, for the week ahead, uh, just ask me in the comment section. Do not forget to check that comment section throughout the week so that you can catch my updates. All right, I love to update during the week and let you know how things are rolling in any of the markets that we cover in the video. All right, may profits be upon you. Trade carefully this week, and I will see you in the next video.